Hi everyone, and today in this video we are going to read about the only dental company in India, and the name is Laxmi Dental, and we will also try to understand that why exactly Quant Mutual Fund has done a new edition of this company in their portfolio. So I would suggest you to watch the whole video because there are some interesting points about the company for the coming future. And one thing I want to show you guys is that I also use aligners, but these are of Tutsi and not of Laxmi Dental. So according to my experience, I think aligners are much better and comfortable compared to braces, which are non-removable and not flexible. And just a quick disclaimer that this is not a buy or sell recommendation. So let's start with the report. So currently Laxmi Dental is the only India's fully integrated provider of dental solutions, and along with that they have a very experienced management team. And one of the key differentiator of Laxmi Dental compared to other dental solution company is that they operate in a B2B2C model, and also they are the second largest player in this segment. And along with that they also have 22,000 dental clinics in 320 cities, and they also have presence in more than 90 countries. Now if we take a quick look at their shareholding pattern, so here we can see that promoters are holding 41.7%, FIs are holding 34.24%, and Goldman Sachs, which is one of the biggest fund in the world, they have 3.5% stake in this company. Then DIS are holding 12.86%, and here we can see that Quant FlexiCap has done a new addition of 2.79% in their portfolio, which I have also discussed in my previous videos of mutual fund holding changes. And if we take a look at their geographic presence, so India consists of 66.7%, USA consists of almost 20%, UK is 7.6%. So from this data point, we can definitely say that they have a good presence in some big countries in the world. And now if we take a look at the history of this company, so this company was started in 1989 by Rajesh Khakkar, and he started a small dental lab during that time. And in 2004, they started their export dental business. Then fast forward in 2019, they started Vedya Solutions. So here they offer aligner materials, dental thermoforming machines, then biocompatible 3D printing resins and consumables. Then in 2021, they also launched Kids E-Dental, and they acquired 60% stake in JCE. Then in 2023, they started their another business with the name of Illusion Zirconia, and one of the very big brand ambassador in this is the Madhuri Dixit. And lastly, they got listed in Jan 2025. And now let's come to the next part where we will see the revenue segment in this company. So we can see that there are 4 big revenue segments in this company. So the first one is the domestic lab, second is the international lab, third is the aligner business, which is the B2B2C model, and lastly they also have aligner business, which is only B2B. So on the right hand side, we can see that within the Laxmi Dental, the first one is a laboratory offering. Here we can see that they have both the presence in the domestic and the international markets. And in the domestic, they have the Illusion Zirconia, where they manufacture the crowns and bridges for dental solutions. And next in the aligner solutions and the pediatric dental products, so first in the Tagias, they make aligner sheets, and they also have automated thermoforming machines. And next in the Illusion aligners, they make aligners with a dentist-led prescription. And now let's come to the next segment where we will do the peer comparison. So here we can see the difference between the Laxmi Dental and the Tutsi, where Laxmi Dental operates in a B2B2C model, and they also work with Invisalign compared to what Tutsi is doing, where they operate in a D2C model. So here we can see the benefits of the B2B2C model over the D2C model. The first one is the high treatment quality. The second one is the lower customer acquisition cost. Then they also get a cross-selling opportunity, and because of this model, their manufacturing efficiency is also increased. And lastly, because of this reason, they have a very good opportunity for the market penetration. Now if we take a look at the image I have attached on the right hand side, so this is a very interesting data point, and we can see that why Laxmi Dental is much different than other companies globally and domestic wise. So here we can see that Laxmi Dental has a presence across all the product offerings. For example, the crowns, the dentures, then aligners, aligner sheet, thermoforming machine, intraoral scanner, and also the pediatric crowns. And one of the best part of this company is that they are vertically integrated, where we can see that they're manufacturing the key raw material which is used in this product, and lastly they also make the finished product for the customers. And now if we take a look at the difference between the metal braces and the aligners, so here we can see that aligners take less time to shape the teeth. I bought my aligners 1 year ago, and now my teeth are completely aligned. Then also there is less visit to the doctors compared to what we need to do in the metal braces. And one of the best part of the aligners is that it is invisible, and you can remove it anytime whenever you want to eat something or whenever you feel little uncomfortable. And now let's come to the next segment where we will see the industry overview. So here we can see that the first industry, which is the crown and the bridges market. So that is expected to grow from 71 USD billion to 121 USD billion with a growth rate of 8% CAGR. And currently the Indian crown market is at 1.4 USD billion and it is expected to grow at 12% CAGR, which is more than the global market. Second, if we take a look at the global aligner markets, so that is currently standing at 20.7 USD billion and it is expected to grow at 15% CAGR till 2030 compared to the Indian aligner markets, which is currently at 133 USD million and it is expected to grow at a 23% CAGR to 569 USD millions by 2030. And lastly, if we take a look at the global pediatric market, so that is currently at 2.1 USD billion, which is expected to grow at 8% CAGR till FY30 compared to the Indian markets, which is currently at 63.9 USD million. It is expected to grow at 14% CAGR. So the one point we can definitely see over here is that Indian markets are growing much faster compared to the global markets. And now let's come to the next segment where we will see the number of labs they have in the domestic and the international markets. So first, if we take a look at the domestic lab, it is expected they currently have 5,80,000 labs in domestic and it is expected to grow at 15% CAGR till FY27. And the revenue they're generating from this domestic lab is 87 crores in FY25 and it is expected to grow at 16% CAGR till FY27 to 117 crores. And second, if we take a look at the international labs, so it is expected that they have currently around 3 lakh labs, which might grow to 25% CAGR till FY27. And the revenue they're generating from this international labs is 60 crores in FY25 and it is expected to grow at 28% CAGR to 99 crores in FY27. And now let's come to the next segment where we will do the financial analysis. So in FY25, the revenue grew 23.5% and it came to 239 crores and it is expected to grow more than 20% till FY27 where the revenue might touch almost 370 crores. And one of the interesting data point is the EBITDA and their EBITDA margins. So currently they have 17.5 margin with 41 crores of EBITDA and it is expected to grow more than 20% to 90 crores with a margin of 24.4%. So that is a very huge jump in the EBITDA margins and we can definitely expect a good operating leverage kicking in the coming future. Then next, if we take a look at their EBIT, which is currently 26 crores, it is expected to be around 63 crores in FY27. And lastly, if we take a look at their PAT and the PAT margins, so currently they have almost 32 crores of PAT with almost 11% of PAT margins and it is expected that in FY28 it is going to be around 68 crores with a PAT margin of 18.5%. So just look at the change in the PAT growth. It is 88.9% growth in FY26 and 38.6% growth in FY27. And now let's take a look at some of the key ratios of Laxmi Dental. So here we can see that their EPS, which is 7.5, it is expected to be around 17.3 in FY27, which is more than double. And currently the PE valuation is around 91.4 and currently they're trading at a forward PE of 35. Then even their EV by EBITDA, which is currently 55.4, it is expected to be around 25 in FY27. And even if we take a look at their ROE and ROCE, so currently they have 21 of ROE and 18.6 of ROCE, which is expected to be around 23.4 and 22.7 by FY27. And lastly, one of the best thing of this company is that they are currently debt free and they are debt free because they recently came up with the IPO and they have cleared all the debt. And now let's come to the next segment where we will see the management guidance for the coming future. So the first point, company has said that they want to reduce the working capital pressure and they want to deleverage the balance sheet, and for this reason they came up with an IPO of 27.6 crores. And out of the whole 27.6 crores, 23 crores is given to the Laxmi Dent part and 4.6 crores is given for the subsidiaries, which is the Bisdent Devices and the Signature Smile Dental Clinic. Then for the revenue growth, they have given a 20 to 25% CAGR guidance for the next 2 to 3 years. And about the margins, they are currently very confident for the further expansion and they're expecting a good operating leverage. Then they're also positive of their US and the international business where they're operating. And lastly, they're also focusing of endorsement in the IPL, which they did currently, and also getting some famous celebrities like Kareena Kapoor and Madhuri Dixit to endorse their products. And now let's come to the next segment where we will do the SWOT analysis. So in the strengths, they have mentioned that they are currently the only integrated company and the second largest player and the largest export lab player. Then in the weaknesses, they have mentioned that they have very heavy reliance on the branded products. So if anyone gives a negative review for the company and products, so that might damage their brand. Then they also have a concentrated dental laboratories in the Western India, US and UK. And also along with that, this industry is a very fragmented industry where anyone can enter, and because of this reason, there are very low entry of barriers. And if we take a look at the opportunity wise, they have already expanded to the tier 2 and tier 3 cities. And along with that, they've also deepened their export markets. And lastly, if we take a look at the threat and risk in this industry and company, so first is the intense competition that we already discussed, and then they also have regulatory risk in India and the international markets. And now let's come to the last segment where we will do the technical analysis of this company. So here we can see that they came up with an IPO and listed in Jan 2025, and since then the stock came down to 320 rupees, and now currently it is consolidating in almost the same range after the IPO. But after reading all the data points and the industry and the company growth, I am definitely bullish on this company. And write down in the comment section that what do you think about the company and how it will do in the coming future. Until then, see you in the next video.